All right, everybody, welcome back to another episode of Everything Business. All right, we are on the series of the books of original entry, and right now I'm going to be doing and showing you how to do the cash book. It's really everything you need to know about the cash book. By the end of this video, you would be able to do a CXC question on cash book. Right, so stay tuned, watch till the end. Let's get right into it. All right, so there are some things that you need to know before you attempt to do cashbook, right? So you need to be familiar with the double entry principle. If you're not familiar with the double entry principle, then I would suggest that you stop this video, go back and watch my videos on double entry so that you can become familiar with the double entry system, because there are skills that you are going to learn in double entry that you are going to definitely need to do the cashbook, right? Also, balancing off of accounts is another skill that you will need to know how to do if you are going to do this topic. All right, so you're going to need that skill as well. All right, so just bear that in mind. Now let's look at what the cash book is. So the cash book is really a book of original entry. It's one of the book of original entry. It is used to record all transactions involving cash and check, right? That's all you need to remember, right? That is what this book is used for. Any transaction that involves cash or check, then this is the book for you. This is the book that you use, right? You don't use any other book. Once the transaction involves cash or check, then the cash book is what you are going to use. The cash book is really a combination of cash account and the bank account. They put both of them into one and just call it cash book, right? So that's what they really need to know. The cash book is also linked to the general ledger, right? And you will find cases also where it is linked to the purchases ledger and the sales ledger. So technically, or basically, right, if you ask me, then the cash book is linked to all the ledgers. So let's just correct that right there, and then so that there's no misconception, right? So the cash book is linked to all ledgers, right? Yes, it is linked to all ledgers, because there may be time when you have your debtors and your creditors, right? Your debtors paying back money, or you are paying money to your creditors, and it will affect it there as well, right? So cool, good. Now we have two types of cash books. We have the 2-column cash book, which is pretty simple. 3-column cash book, which is also pretty simple, right? The difference though is that the 2-column cash book, right, it does not make allowance for discounts, while the 3-column cash book make allowance for discounts. So in the 2-column cash book, you will not find any discount column, while in the 3-column cash book, you will find the discounts columns. So here's a pictorial representation of what I just said. So this is how the 2-column cash book look. It's at the top, right? You realize you have a debit side, left side is the debit side, the right side is the credit side. What you need to remember about the cash book, and that is the reason why I say you need to watch double entry. You need to watch my double entry video, and you need to be familiar with the double entry concept, right? For the debit side of the cash book is used to record cash or checks that you receive. Credit side of the cash book, right, is used to record cash or checks that you are paying out, and that goes for both cash books, right? So that's fundamental concept that you need to remember, and it is pretty simple, right, if you are aware and if you can remember the double entry principle. Now if you look at the 2-column cash book, you have the date column for the date, details column for the details of the transaction, the folio column to show cross-reference, then you have the cash and the bank columns, right? And that's on the debit side. The same thing is on the credit side for the same reason. The 3-column cash book, the only difference, as you can see, is that we now have what? Discount allowed and discount received. Now you may ask, so sir, why the discount allowed is on the debit side? Well, the discount allowed is an expense to the business, right? And you normally, when you are increasing an expense, you make a debit entry, right? So that is one of the reasons why it is on the debit side of the 3-column cash book. Discount received is a revenue, right? And revenue, to increase revenues, you make a credit entry. So the discount received is on the credit side. So you have to remember that discount allowed is on the debit side, while discount received is on the credit side of the 3-column cash book. Very important thing to remember. Now let's practice. Now these transactions, I have made up some of them, while some of them I took from past paper, right? So some of these transactions are actually past paper transactions. You get what I'm saying? Now let's look at it. So we are starting, right? March 1, we are starting with the opening balances, right? It says balances brought forward. So sometimes they will give you where they have the balances brought forward from the previous month, or they may just say you're starting up the business. If you are starting up the business, then you would have to obviously use capital in your details. But for this particular question, right, it says balances brought forward cash, and they give you the information for bank as well. I want you to pay attention to the fact that the bank amount is in a bracket, which would signify that it is a negative figure, which would signify that this is not a normal thing, right? Now I want to introduce you to a term that is called bank overdraft, which is what this is, this bank figure here is. What it means is that you have used more money than what you have in your bank account, and so we call it a bank overdraft. It is a liability to the business, and it is represented on the credit side of the cash book. All right, so let's record it. So you go March 1, put in the date, March 1, the details, right, that you would have here is balance brought forward. So you could have balance BF, right? Well, the BF would go in the folder column. So you go in the folder column here, put B/F, right? And in the bank column, you would put the amount of money, 5,690, right? And the reason why it's on the credit side is because it's a balance, or it's a bank overdraft, right? And it carries a credit balance. That is the only time you will see an opening balance, right, on the credit side in the cash book. You will never see that for the cash account though, because you cannot spend more money than what you actually have, right? You can't spend more cash than what you actually have. So you will never see that for the cash, but for the bank account, you will see that. And CXC likes to test your knowledge about bank overdraft, so you will see that. Sometimes they will say bank overdraft, and so you know how to treat it, or sometimes they will just put the information in a bracket there, or they will indicate by putting a negative in front of the figure. You should know that that is a bank overdraft and how you should treat it. All right, so balance brought forward, debit the cash account, which is 2,350. All right, and so we are going to insert some more rows so that we can put in our information there, right? All right, so there we go. Next transaction says March 3, cash sales 5,700. Now this transaction, what it is basically saying is that you are selling goods and you are receiving cash. Now, if you are receiving cash, then it means that you're going to put the information on the debit side of the cash book. Why? Because the debit side is the receiving side, right? So cash received and the check received is placed on the debit side of the cash book, while cash or checks paid is going to be placed on the credit side of the cash book. All right, so please remember that important concept. So March 3, in the details column, you're going to have sales. In the folio column, the sales account would be in the general ledger, so you would have GL, right? And then in the cash column, because that is what you're receiving, cash, so you will put the information in the cash column, 5,700. All right, good. The next transaction is March 6, cash sales deposited immediately into the bank account. Right now, this transaction, you will normally see it in the textbook as cash sales paid directly into bank. It's the same transaction. And what this means is that you made a sale, but the money goes straight into the bank account. Maybe the person used a credit card, maybe the person used a debit card. The money just goes straight into the bank account. So you will put the information on the debit side just the same. Why? Because you are receiving money, so that's one hurdle that you have to get over. You realize that, okay, I am receiving money, so it must go on the debit side of the cash book. Then you need to ask yourself now, which column, right, or which account is receiving the money? And in this case, it is the bank account that is receiving the money. So you go March 6, right, and you write sales again, but this time, right, in the folder column you have general ledger, but in But this time, instead of putting the money in the cash, you're going to put the money in the bank column because it is the bank receiving the money. So $10,000, just like that, right? March 8th, the owner withdraws $500 from the bank account to pay his house rent. Whenever the owner of the business withdraw money for his personal use, we call that drawings. Drawings is an expense to the business, right? And so in the cash book, they are taking money from the business, taking money from the bank account, right? So therefore, the information will go on the credit side because money is leaving the business, right? So you know right off the bat that that is the credit side, it must go on. And then in which account? I may ask, it is the bank account because the transaction says he took the money from the bank account. So March 8th, and in the details you will have drawings, right? Drawings would be in the general ledger, and in the bank account you would put the information, which is $500 because that is where he's taking the money from. It did say $500 from the bank account. All right. Now we move to March 10. It says owner withdraws $1,500 from the bank to use in the business. Now this is a very important transaction. This transaction is what we call a contra entry. Right? So let me put it there. This transaction is what we call a contra entry. Now a contra entry is when the double entry for a transaction is completed within the cash book. Right? Now what I mean by that is that the debit and credit will both be made within the cash book. Right? So the transaction affects both bank and cash columns. That is why it is called a contra entry. So what is really happening here is that you are taking money from the bank account and you are putting money in the cash account because it says for business use. In the textbooks, they may say in the cash tail, they may say they take the money from the bank, put it in the cash, stuff like that. It's the same thing. So you are taking money from the bank. What I normally tell my students when you are doing a contra entry is you have to take it step by step. Look at it first. So the owner withdraw money from where? The bank. So the money is coming from the bank account. So let's write the date. So we know that the information will be on the credit side, right? So March 10, in the details column, you will put where the money is going. It's going to the cash account. In the folder column, you'll put a C to indicate that it's a contra entry. And you put now the money in the bank column because that is where the money is coming from, $1,500. But you're not finished. You have to now go and make a debit entry in the cash account because the cash account is receiving money. So you write the same date, March 10. Where is the money coming from? Bank. So you put bank in the details. And in the folder column, you're going to put a C to indicate that it's a contra entry. And then in the cash column, you're going to put that money, $1,500. And so you would have done the double entry within the cash book, and that is why it's a contra entry. Please look out for the contra entries because they are very tricky. Just know that a contra entry is when one transaction affects both bank and cash columns, right, or accounts. All right, next one, March 15. You paid M. Seeley $450 cash, having received discount of $50. So you are paying money. So that means money is coming from the account. Therefore, the information will be on the credit side. So March 15, right? Who is it? Who are you paying the money to? M. Seeley. Seeley, right? M. Seeley, you are paying money to M. Seeley. Chances are you are holding money, right, or her money. Therefore, this information in the folio column you would have is PL, as in purchases ledger, because it would have meant that it's a creditor or a supplier, right? So you are paying them back what you had owed to them, all right? In the discount column, you would put the amount of discount that you receive, which is $50, and it says having received, which means that they would have taken it out already, right? And you say you're paying it in cash. So you're going to put the information in the cash column, $450, right? And just like that, you have recorded that transaction. Moving on, March 20, D. Lumley paid us. Once you see paid us, money is coming in, we are going to record the information on the debit side. All right, so March 20, D. Lumley, and D. Lumley would have been a debtor to us. That is why he's paying us. So we will put SL in the folio column, right? He paid us his account of $6,000. So he owed us $6,000, right? we now allow him a discount of what? 5%. Now we have to calculate what 5% of $6,000 is. So that is really what we are going to now do. We're going to calculate 5% of $6,000. So you pull out your calculator and you go 5 divided by 100 multiply by 6,000, and that is $300, right? $300. So you go and you write in the $300 in the discount allowed column, and then you will have to now subtract the discount from the amount that he was supposed to pay you, and that would leave us with 5,700. So it is 6,000 minus 300, which is the discount, leave us with 5,700, right? And then finally, March 25, it says wages paid in cash or paid wages in cash, 2,500. Once you see, say we are paying something, we know that that information goes on the credit side. So we say March 25, wages in the details column. In the folio column, wages is an expense, so it will be in the general ledger, right? You know, you only use the purchases ledger or the sales ledger, right, if it's a debtor or creditor. So for the sales ledger, you only use the sales ledger unless if it's a debtor. The purchases ledger if it's a creditor. All right, it did say cash. We are paying wages in cash, 2,500. So we record that right there. Now let me just align all of these figures to let it look a little bit more organized. All right, good. And so now we reach to a crucial point in our cash book, and it is to balance off the cash book, right? So we have to now balance off the cash book. So let me just balance off this cash book and show you. Pretty simple, but you need to practice in order to get it. So the first thing you do when you're balancing off your account is you have to add up your columns. So let's do the cash column first. All right, I want you to see my calculator, what I am doing. So I'm going to show you my calculator. All right, so let's pull out our calculator so that you guys can see the calculator. All right, so we're going to add up the information that is there. All right, so for the cash column, it is 2,350 plus 5,700 plus 1,500 plus 5,700. All right, so that is the total, which is 15,250. That is the total on the cash column on the debit side. So you can go ahead and write in it, you know, just jot it down somewhere, right? So 15,270, that was it, 250, 15,250. You just jot it down somewhere, right? Because you don't want to forget. So let's go and add up now the credit side, right? The cash book. And we don't even have to look far for the credit side. We can look at it and we can realize that it is what? 2,500 plus 450. So it is 2,500 plus 450, which is 2,950, right? 2,950. So obviously the debit side is greater than the credit side, and we know from that the balance carried on would then be on the credit side in the in this case, right? Because the balance carried on is always on the side that has the smallest amount. So March 31st, you go balance carried down. So you go CD/D. Let me do it lowercase so that you don't disturb it. Yeah, so balance carried down. Now we have to know subtract the smaller from the larger. So 15,250 minus 2,950. 15,250 minus 2,950. That gives us 12,300, right? 12,300, and that is our balance carried down. We know that both sides is going to be equal to 15,250. So you can put in that information there. We're not going to double line it just yet. Still, let's wait until we do the bank and we just do one thing. Now let's do the bank column. Obviously, we look at the bank column on the debit side. We see that is 10,000. Right? We know that is 10,000, and obviously it is more than the credit side. We can look at it and just know, right? So let us add up the credit side now. So it is what? 5,690 plus 500 plus 1,500, and that would be equal to 7,690. So obviously it is less, right? So let's do the subtraction. You get 2,310. So the balance carried on will again be on the credit side, 2,310, and that would now add up to 10,000 right there. All right, if you look at our discount received column, we see that we have $50 there. We would total it, and then the discount allowed, we have 300. So we just total them like that. Now we can go ahead and double line these accounts. So we go and we double line these, right? Underline them like that, and just like that, you would have balanced off your cash book. You know that if you have a balance carried down, you must have a balance brought down. So you can just make the balance brought down for March, what come after March again. So March, April, and then I have April 1, you bring over these balances. You would have realized also that the bank account now has a positive balance, right? And that is a good thing, right? So there you have it, right? Cashbook. I can promise you that the cashbook does not get much more difficult than this. The most it will get in terms of difficulty is you just have more transactions, right? But basically this is it. Doesn't get much more difficult than this, and if you can do this, then you would have gone on a long way in doing the cashbook. All right, so again, thank you for viewing, right? Please remember to like, subscribe, share, drop me a message, drop me a DM, right? And feel free to contact me. All right, God bless, walk good. See you in the next one.